Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, October 17th, and the market's just closed, so let's take a look and see what we got here today. The semiconductors are on the screen right now, symbol SMH, looking at the spiders for the semis. And today we had a little bit of profit taking. This, profit taking, a lot of people would argue, has been overdue, but we did see some profit taking. The semis came down and tested the 10-day moving average. You see that right there at about 34.71. Today's low was actually 34.65. And you also see in there that the 200-day moving average is right now at 35.0025. So with the close at 34.90, we got the SMHs to close back below that 200-day moving average. I've been expecting that the market would probably pull back and test that 200-day moving average sometime over the next week, week and a half. It happened today, and I think it took a lot of people by surprise, just the fact that it came down all at once today. But, the markets have been due for a little bit of a breather, and that's all you have to look at this as today. On the 10-minute time frame, you can see here, it came down through, opened below daily S2 and just continued to get worse from there. It also closed below the 5-day moving average. So I think that the semis need to consolidate near this 200-day moving average some more, and hopefully the market can close above that 200-day moving average by the end of the week, and that would just make it a little bit more bullish, I think. Can't read too much into this sell-off yet because it's really not much of a sell-off at all. The mid-cap spiders, symbol MDY, I've got up here right now, and mid-caps have, pulled back a little bit today. And just like a lot of the market, we had early weakness and followed by a recovery that almost saw all those gains retrace. Now, on this short term, that is the 10-minute time frame, we came close to that rising 5-day moving average. We're starting to see these moving averages crisscross a lot. That, to me, means indecision, means more consolidation is needed in here, and breaking below today's low tomorrow, I think would bring us back to a potential test down near 141, which would still put us in good shape, but it'll bring us down to that rising 10-day moving average and keep us above, these July highs as well. So, again, too early to read into any of this selling. It looks just to be some profit taking. We got stopped out of some good positions today. I'll review those in the next video. But again, don't read too much into this. This S&P 500, the SPY, this market is just very extended. It was due for a pullback, and we really didn't even get much of a pullback in here at all. The market gap below this trend line that I had drawn in yesterday, and then remained weak for a bit. It came down to that rising 5-day moving average. Second time it's done that in the last 6 sessions or so, and was able to manage a bounce towards the end of the day. So again, don't read too much into this, but it looks like we're due for some more consolidation. Obviously, the best level of, or more important level of potential support is down near 135.50 for the spiders. And finally, we've got the NASDAQ 100, the QQQQ. Looking at this market, again, another picture of an extended market. That's taken some necessary pullback in here, and no damage done as far as the bigger picture goes. The 5-day moving average is still consolidating. We had that pullback come down to, what's this level here today? About 41.70, and that's where you might have expected it to. I was thinking a little bit higher. It might have found support. But all in all, we're in an uptrend. Don't get, too aggressive on the short side here because most stocks are in good uptrends. But obviously the risks, I've been saying, have been higher. So you just have to be more diligent about honoring your stops in this environment.